Hi, this is tax attorney Anthony Parent, managing partner of Parent & Parent LLP, founder of the IRS Medic. I'm here to talk about the June 2013 FBAR updates. There has been a lot of news over the past few months, and I want to get to some of the more important things. But first, very briefly, just for those who are new to the FBAR, it's a form that you have to file with the IRS. If you have financial accounts worth over $10,000 in the aggregate, you own or control, that are overseas, and it's a form where you tell the IRS the accounts, the amounts, and some other information. And you might want to know what the big FBAR deal is. Well, it's penalties. Failing to file an FBAR could result in some staggering penalties, and that it's based on the account value, not the tax evaded. So it could be 50% of the account value if the IRS feels it's willful, and it could be assessed for multiple years. So as you can see, it's a penalty that could exceed the value of an account pretty easily. And there is an FBAR deadline coming up on June 30th. Okay, for tax year 2012, your FBAR form is due in by June 30th, 2013. And one of the technical requirements is it doesn't mean postmarked by June 30th. It means actually received by the IRS by June 30th. But the truth is we've never seen penalties for days, months, late FBARs. They're really not doing it. And it does not go to the regular IRS. And I'm going to share with you the mailing addresses. It's a totally separate processing center. You don't send it in with return, even if you're filing an extension. Here are the mailing addresses. If you're going to be sending it by regular mail, and you know you'll be getting out easily in time, you can send it. Here's the address here. You can pause the screen so if you need to write this down. And if you're going to be sending it overnight, the IRS has a special address for that as well. And again, both of these are going to Detroit. Now, I want to talk about one of the first updates. The General Accounting Office just recently released a report, and I would say the big news I saw in that is something called the soft disclosures. And this was an invention of many people. And it's something we told people not to do because it didn't make any sense. And just calling it a soft or quiet disclosure didn't mean it's soft or quiet. Regardless, these people are busted. The IRS has identified 10,000 people who've made quiet disclosures with accounts over $1 million. And they did it exactly through the way that many of us knew they would. Basically, they looked to see, okay, who filed amended returns with on Schedule B some dividends or capital gains for the first time, who filed FBARs for the first time as well, and they were quite easily able to see that these people who were sold that they were making a soft disclosure were basically yelling, "Here, I'm doing the thing you don't want me to do." And so the IRS in this report says the IRS will be going after. They're most likely going to prioritize these 10,000. And it's individuals and businesses. They're going to be sending FBAR auditors after these people. But you could be rest assured that the IRS actually knows about all the other ones for accounts under $1 million. But they just want to, I would surmise, they're going to allocate their resources to go after the big dollar cases first. The thing is they're probably not going to be coming criminally. The IRS CID does not. The CID Criminal Investigation Division doesn't have the resources to go after everybody. They really don't need to, because remember that 50% penalty I talked about? Okay. Well, the law was changed so that the taxpayer has a burden of proof to prove they were reasonable. That is, the IRS, okay, could just assume anyone who has done a soft or so-called quiet disclosure was willful, just based on that. And now it's up to the taxpayer to has an uphill battle to prove no, it was a reasonable cause. And the way to think of it differently is when we're doing an offshore disclosure the proper way, and we're opting out and coming up with our reasonable cause, we receive a favorable audience to the reasons why the accounts weren't reported nor the income. But it's totally different when you are having an FBAR audit. You're really in hostile territory. And the thing is, the IRS will not, will be loath to give someone who did it their way a better deal than someone who went through the OVDI, OVDP program and argued for a lower FBAR penalty the right way. So here's the thing you need to know. If you did do a soft or quiet disclosure, whatever you want to call it, if you did make that mistake, okay, and there is no auditor on you, you can still get into the offshore voluntary disclosure program and do it right away. Now, the thing is, the IRS may want to know who advised you to make a soft or quiet disclosure. So if you do happen to be one of those tax professionals who did make this mistake, okay, I would strongly advise you to make sure your communications relay to your clients that you made a mistake, and the proper thing for them to do is file a disclosure, a proper disclosure. That is the most essential thing you need to do to protect yourself. Our second update, and this, this is sort of, it's very disappointing to read this. This is not us saying it. This is the General Accounting Office. They just looked at to see all what's going on, that so many people were getting caught up with these unreported FBARs, and it's innocent mistakes, and we know that. And the real depressing thing here is the IRS has made no outreach efforts to educate expats and immigrants, because these are really the people who are getting caught up in this entire universal tax jurisdiction problem. The majority of people with these FBAR issues are not engaging in intentional tax evasion. And they are just letting these people figure it out for their own. A lot of people, you might be watching this video for the first time and figuring out that actually you have a problem. And I talked to someone the other day, and I was explaining to say, hey, the IRS you have to report your worldwide income. If you don't report your accounts or your income, you have a serious problem. The IRS, you're going to have to go through the entire program. The person said, wow, that's a pretty serious thing. Well, luckily, it doesn't apply to Canadian accounts. And I just looked at it and I said, oh, no, it does. Canada, too, is a foreign country. So it does apply to that. And so many people just can't believe that this is the rule. And it really is. And the thing is, a universal tax jurisdiction. Okay, the only other country in the world is North Korea. Okay, probably not a place you want to be. That taxes their citizens on worldwide income. Okay, so everybody who is an expat or a citizen, they're surrounded, or a dual citizen, or coming from another country, surrounded by people where why would you report? Why would you have to pay taxes to the U.S. if you're not there? Or if the money wasn't made there? It doesn't make any sense. And the truth is, it doesn't make any sense to me, but it is the law. So it's just something that catches people by surprise, and people are still shocked, absolutely shocked, to learn that this is the way. And the thing is not only do you have to report the income, you have to report the existence of the account if it exceeds $10,000 at any time during the year, even if the account loses money. Now, one of the things out there that is for expats who have never filed taxes over the past few years is a streamlined OVDI. However, there is not one available for recent immigrants who've made likewise a similar mistake. Many immigrants here, on a visa, they're having to go through the entire program to do it the right way. And number three, and I think this is sort of tied into it, okay, is that in the news, the IRS is being investigated, and reforms will be coming for a lot of the political targeting, okay? So here's the news on this one. On the OVDI, FBAR, international tax, there's no news, okay? I did read a letter from the Americans Living Abroad Association, and they're trying to make hay out of it, but here, all they're greeting with is nothing, okay? The offshore crackdown has nothing but bipartisan support. And so this is the thing, is that, really understanding the landscape, the IRS does a lot of things, okay? And they're not getting anything but, bravos for this offshore crackdown. And that's really understanding, what we're dealing with here and making the